Welcome back, investors, to Ticker Time News. I'm Adam, and GameStop shares lost their fun today as they took a dive in the deep end following a large miss on earnings. Now, on the chart, you can see that GameStop is range bound ever since the beginning of March. Range bound means that the stock has a support level, and GameStop is at $147, and it has a resistance level, and right now that's at $225. And the company just trades in, up and down, and in that range, and that is GameStop all year long. Anytime it has popped up above that resistance line, it comes right back down. So this range for GameStop has been great for traders because you can pick this up when it's at the bottom, sell it when it's at the top of the range. And right now, we are falling to the bottom of the range. Once we get past inflation on Friday and the Fed on Wednesday, maybe we can finally see a Santa Claus rally for GameStop to get back to the top of their range and to make a little profit by the end of the year with GameStop doing so. But we'll have to wait and see how that plays out. Now, GameStop, a favorite name among momentum trading crowd, is powering down after issuing mixed Q3 results while once again refraining from providing specific guidance. The wild volatility in GameStop's stock is not only a function of speculative trading activity, but it's also tied to the company's transformation process as physical game discs become increasingly obsolete and everything moves to the cloud and becomes digital. With GameStop badly missing on the bottom line, it's clear that the company's turnaround efforts are still a work in progress. When GameStop appointed Matt Furlong as its new CEO, the company's plan to reinvent itself kicked into motion. With two executives coming over from Amazon, the writing was all on the wall. And enhanced e-commerce and digital capabilities would be the new hallmark of GameStop and its transformation. Therefore, it doesn't come as a surprise that the company ramped up hiring in such areas as e-commerce and supply chain management, helping it to accelerate delivery times and improve the customer experience. On the topic of hiring, reports surfaced in late October that GameStop was looking to add Ethereum and NFT specialists to support its plan of building an Ethereum-based Web 3.0 gaming unit. During the earnings conference call last night, Furlong admitted that the company is indeed exploring opportunities in blockchain, NFTs, and Web 3.0 gaming. GameStop's vision is that games will be, quote, places you go as gamers virtually insert themselves into a virtual reality environment. In this scenario, blockchain technology would be used for communication purposes. The upside of this increased hiring activity and ramp up of technology investments is that SG&A costs grew by 17% year over year to $421.5 million. At the same time, GameStop experienced an unfavorable sales mix as low margin categories like new console hardware became a larger piece of total revenue. The reopening of stores and higher freight costs compounded the issue, causing gross margin to slide by 290 basis points year over year to 24.6%, despite a solid 29% jump in revenues to $1.3 billion. GameStop's operating loss still widened to a loss of $102.9 million from a loss of $63 million a year ago at the same time. These headwinds did hurt GameStop. GameStop also said it decided to front load investments in inventory this year in order to make sure it was ready for holiday demand and supply chain issues. Inventory came in at $1.14 billion at the close of this quarter versus $861 million last year at the same time. In my view, I believe that GameStop and investors would be more accepting of the weaker bottom line performance if there was a better sense of GameStop's timeline regarding its turnaround plans. Furlong did explain last night that the emphasis will be on driving strong revenue growth at the expense of short-term margins, while recalling his prior experience with e-commerce, presumably while he was at Amazon. Furlong believes that revenue growth will ultimately translate into scale and market leadership. However, the management team did not offer formal financial guidance, nor did it field any questions during its Q&A session. Given that the company is in the middle of a major transformation, it's understandable that some investors may be dismayed by the more limited communications. The main takeaway is that GameStop played it down the middle by providing just enough strategic visibility while leaving room for dreamers to envision GameStop as a place to experience the metaverse. GameStop remains a very risky stock due to fundamental and speculative trading reasons. While the right management team seems to be in place to guide GameStop's turnaround, it's likely that the next few quarters will be rocky as it looks to reposition itself with a changing video game landscape. What do you think about GameStop? Are you investing in it, trading on it, or staying away from it? Let me know in the comments below. Also, if you like my perspective, then click the first link in the description below for trade setup, stock ideas, and other exclusive content like buy-sell alerts. Also, it's a great way for you to help support my research, analysis, and technical breakdowns and get exclusive content in return. Oh, and make sure to click that like button and share this video with everyone so we can all reach financial freedom. Thank you so very much for watching, and I will see you in the next video.